Global food commodity prices decline in January. U.S. job growth slows more than expected in January. And foreign remittances from Saudi Arabia surged 14% year-on-year in 2024. Welcome to the Qnews Economic Bulletin, where we bring you the latest developments shaping the global economy. From key market trends and financial updates to regional economic highlights and forecasts, we provide essential news and analysis to keep you informed. Welcome back. We start off with global news as the Bank for International Settlements has issued its first public warning on the risks posed by U.S. President Donald Trump's trade war and deregulation agenda. The bank's chief, Agustin Carstens, highlighted growing concerns over trade tensions, fiscal policies, financial regulation and geopolitical uncertainties, warning they could impact global economic stability. He also noted that tightening policy uncertainty could slow economic growth as business delay investment and households curb spending. Carstens also pointed to increased market volatility with sharp currencies fluctuations potentially driving inflation. The Food and Agriculture Organization has reported that global food commodity prices declined in January, driven by sharp drops in sugar and vegetable oils. The FAO Food Price Index fell to 124.9 points from 127 in December. Despite the monthly decline, the index remained 6.2% higher than a year ago, but was still 22% below its March 2022 peak. International Monetary Fund First Deputy Managing Director has stated that it is too early to determine the precise impact of higher U.S. tariffs on other countries. Speaking at a press conference, he emphasized the need for global cooperation, urging nations to resolve trade disagreements and create a stable environment for international trade. Her remarks came in response to questions about potential trade frictions and U.S. President Donald Trump's tariff threats, including those targeting Japan. More from global organizations as the European Bank for Reconstruction and Development President has said that the bank plans to invest at least 1.5 billion euros in Ukraine this year to support its economy amid conflict and businesses. Since its conflict with Russia in 2022, the EBRD has increased commitment to Ukraine, investing over 6.2 billion euros across various sectors. He also said the EBRD could raise its investment in Ukraine to 3 billion euros annually after the conflict ends. The Ukrainian economy, which shrank by a third in 2022, is recovering but remains smaller than before the conflict, relying heavily on foreign financial aid. U.S. job growth slowed more than expected in January as extreme weather conditions, including wildfires in California and severe cold across much of the country, impacted hiring. However, a steady 4% unemployment rate is likely to give the Federal Reserve reason to delay interest rate cuts at least until June. According to the Labor Department's reports released on Friday, non-farms payrolls rose by 143,000 last month, down from a revised 307,000 in December. Despite the slowdown, wage growth remained strong, and average hourly earnings increased by 0.5% in January, bringing the annual rise to 4.1%. Statistics Canada has shown that the country's unemployment rate unexpectedly fell to 6.6% in January from 6.7% in December, as the economy added a net 76,000 jobs. This marks the second consecutive monthly decline, defying analysts' expectations of a rise to 6.8%. Despite the gains, unemployment remains high at 1.5 million, with many job seekers struggling to find employment. The StatsCan noted that job additions were balanced between part-time and full-time positions, with significant growth in manufacturing, professional, scientific and technical services. Data from the Federal Statistics Office has reported that German exports increased by 2.9% compared to November, defying expectations of a 0.6% decline. However, for the full year of 2024, exports contracted by 1.0% due to the weak demand from China. Imports fell by 2.8%, and the foreign trade surplus for the year stood at 241.2 billion euros. Despite the export growth in December, industrial output dropped by 2.4%, far worse than the 0.6% decline economists had predicted. Industrial production remains about 10% below pre-pandemic levels. Russia's prime minister has stated that the country's economy expanded by 4.1% in 2024, slightly exceeding the government's forecast of 3.9%. During a meeting with President Vladimir Putin, the prime minister revealed that the country's gross domestic product reached a record of 200 trillion rubles. Putin welcomed the figure, calling them good and satisfactory, but emphasized the need to reduce inflation, which stood at 9.5% last year. Putin compared Russia's economic growth to what he termed so-called developed countries, pointing to lower growth rates in the United States, Germany and France. In Asia, Chinese President Xi Jinping says Harbin's ice and snow economy is driving the city's development and global connections. Speaking at a welcome banquet for dignitaries attending the 9th Asian Winter Games, Xi highlighted Harbin's rich history in winter sports. He called the ice and snow industry as valuable as gold and silver, and a key force for economic growth. Harbin, known as China's Ice City, first hosted the Games in 1996. Now it is becoming a major hub for winter tourism and sports. The International Monetary Fund has expected the Bank of Japan to raise interest rates further this year and gradually bring borrowing costs to neutral levels by 2027. The fund said that Japan's neutral rate is estimated in a band of 1% to 2%, with a midpoint of 1.5%. The International Monetary Fund expects the Bank of Japan to continue its rates hikes if domestic demand straightens as anticipated. On the fiscal front, the International Monetary Fund urged Japan to phase out energy subsidies and shift spending towards growth-focused investments, warning that prolonged fiscal pressure could strain the country's high debt levels. The International Monetary Fund emphasized the need for a clear fiscal consolidation plan to avoid abrupt adjustment in the future. The Reserve Bank of India has cut its key interest rate for the first time in nearly 5 years, aiming to stimulate economic growth as inflation trends towards its 4% target. The Monetary Policy Committee reduced the repo rate by 25 basis points to 6.25% after keeping it unchanged for 11 consecutive meetings. India's economy is projected to grow by 6.4% for the fiscal year ending in March, marking the slowest expansion in 4 years due to a weaker manufacturing sector and sluggish corporate investment. Reserve Bank of India governor attributed the bank's first rate cut in nearly 5 years to its goal of supporting economic growth while maintaining inflation control. He emphasized the need for a less restrictive monetary policy amid global market volatility, uncertain trade policies, and adverse weather conditions. He reiterated the bank's commitment to its 4% inflation target while balancing growth concerns. The Panama Canal Authority refuted the U.S. State Department claim that the United States government ships can transit the canal free of charge. In a statement, the authority affirmed that no charges have been made to tolls or fees and expressed willingness to engage in dialogue with the United States officials regarding warship transits. The United States announcement, which projected millions in annual savings, follows President Donald Trump's repeated calls to take back the canal, citing economic security concerns. Washington has yet to respond to Panama's statements. China has expressed deep regret over Panama's decision not to renew its memorandum of understanding under the Belt and Road Initiative. Chinese Foreign Ministry spokesman accused the United States of pressuring and sabotaging Belt and Road Initiative cooperation and urged Panama to resist external influence. He highlighted the economic benefits of the initiative, which involves over 150 countries, including more than 20 in Latin America. He called on Panama to consider long-term bilateral interests and make the right decision.
近年，中巴两国在共建“一带一路”框架下的合作取得丰硕成果。中方对美国通过施压胁迫的手段，抹黑破坏共建“一带一路”合作的行径，表示坚决反对，对巴方表示不再续签谅解备忘录深表遗憾。近年，中巴两国在共建“一带一路”框架下的合作取得丰硕成果，不断造福两国人民。希望巴方从双边关系的大局和两国人民的长远利益出发，排除外来干扰，做出正确决定。
How does the Panama Canal shape global trade and economy? us from Cairo is economic researcher Mohammed Al-Behweshi to discuss the latest development related to the Panama Canal and its future relations with China. Welcome, sir, to Qnews Economic Bulletin, and it's a pleasure to have you with us in the program. Sir, why has Panama decided not to renew its Belt and Road Initiative memorandum with China?
At the beginning, I would like to welcome you and all viewers. I think that the Panama withdrawing from the BRI memorandum around this time is a result of the US pressures on Panama. And of course, the BRI, including 150 states, creating interests for member states. I think Panama withdrawing at this timing is a response to the US pressures during the past few days by President Trump after President Biden left office. I think the direct statements by President Trump regarding US taking over the Panama Canal, I think this withdrawal is a result of the pressures practiced on the Panama administration expressed by the US foreign affairs ministers.
Sir, what pressures or incentives might the United States have exerted on Panama to make this decision at this point, sir?
We have witnessed during the past few days statements by President Trump regarding the necessity of taking over the Panama Canal and taking it under the control of the US. These are the pressures practiced by the US administration on Panama. At the same time, I think Panama exiting the BRI memorandum might not be very economically influential, given that there are a lot of items connecting the Panama to China, whether in trade exchange or mutual investments. But as promoted by the US administration that there is the Chinese control over the Panama Canal, I think this is pressures practiced by the US stating that China is taking over the Panama Canal, which is a political conflict between both China and the US. I think this is why Panama withdrew from the BRI memorandum.
Sir, how does Panama's exit from the Belt and Road Initiative memorandum affect China's broader strategy in Latin?
The BRI initiative is extended and a revival of the Silk Road initiative, and Panama exiting this initiative will not be very influential, given that there is the trade exchange and economic relations that will not be impacted after Panama exiting. There will always be trade relations between China and Panama. This withdrawal is more political than economic.
Sir, could this move impact the future of Chinese investments in infrastructure projects in Panama?
I think the upcoming period will witness a lot of Chinese policies change. We have already seen a lot of statements by the US administration, and we haven't seen the reaction of China. So I think in this phase, it is we are exploring the results of the US allegations and policies and promises by President Trump. And once these decisions are actually effective, we will start seeing the reaction of China that will be on the same pace of the implemented US decisions. I think the upcoming period will witness a probable an economic war. I think currently China is trying not to take more restrictive policies and waiting the implementation of the US claims and allegations imposing more tariffs or increasing the tariffs and waiting to see any of these decisions or executive orders implemented, whether in imposing customs tariffs or restricting the world economic movement. In this case, everyone will be losing in this economic war that will impact all states.
Sir, thank you very much, Mr. Mohammed Al-Bahwashi, for your insights. And now we move on to the latest developments from the MENA region. The Saudi Central Bank has reported that foreign remittances from Saudi Arabia surged 14% year-on-year in 2024, reaching 144 billion Saudi riyals, the highest level since 2022. The increase was driven by higher employment rates and wage growth in key sectors, especially construction and services, as Vision 2030 projects expanded demand for foreign labor. The number of non-Saudi workers in the private sector grew to 8.9 million, as 3.5% annual increase. Dubai's economic maintained strong growth, with gross domestic product rising 3.1% year-on-year in the first 9 months of 2024, reaching 339.4 billion Emirati dirhams. Key sectors drove the expansion, reflecting the success of the Dubai Economic Agenda D33. The wholesale and retail trade sector remained the largest, growing 2.9% to 83.12 billion Emirati dirhams. The transportation storage sector saw a strong 5.3% increase to 42.14 billion Emirati dirhams, contributing over 20% of total growth. Oil prices rose on Friday after new sanctions were imposed on Iran's crude exports, but we're on track for a third straight week of decline. Hurt by U.S. President Donald Trump's renewed trade war on China and threats of tariffs on other countries, Brent crude futures were up 0.6% at $74.71 a barrel, but posed to fall 2.6% this week. U.S. West Texas Intermediate crude was up 0.6% to $71 a barrel, down 2% on a weekly basis. Gold prices rose on Friday and we're on track for a sixth consecutive week of gains as escalating. Trade tensions between the United States and China prompted investors to seek refuge in the safe haven assets. Spot gold gained 0.6% to $2,873.63 per ounce, rising more than 2% this week. U.S. gold futures added 0.7% to $2,897.50. And market stocks almost declined during Friday's sessions. The future for the S&P 500 declined 0.46%, and for the Dow Jones Industrial Average dipped of 0.40%. In Europe, France's CAC 40 declined 0.48%, while Germany's DAX decreased 0.50% and Britain's FTSE 100 dropped 0.38%. In Asia, Hong Kong's Hang Seng rose 1.16%, and in Tokyo, the Nikkei 225 index inched down 0.72%. Australia's S&P and the ASX 200 dropped 0.11%. That's all for now. Here's what we have been covering and a wrap-up of what we've been covering. Global food commodity prices decline in January. U.S. job growth slows more than expected in January. And foreign remittances from Saudi Arabia surged 14% year-on-year in 2024. This concludes our economic bulletin for today. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok @QNewsEG to stay informed. Thank you very much for watching and stay tuned for more updates at Qnews.